Welcome back here with us on Trading Hour. We're putting the spotlight on new age internet companies now. A lot of these companies obviously are still new to the market. Many are between 1 to say 3 years old, some of the older names. But a lot of them have gone through correction along with the rest of the market. Many are off 20-30% of their peaks. Now, we're putting the spotlight on this conversation because some of the mutual fund houses did launch digital funds late last year. Motilal Oswal itself has one such Digital India fund as well. And we have the fund manager joining in. It's a very new fund, very young fund, launched only in November of 24. Varun Sharma looks at, of course, this fund. So, Varun, it's great to have you on the show. Welcome to the program. And we wanted to bring you in to really understand, because the market confidence obviously has been shaken up. And people are wondering that if these high flyer digital companies, internet companies, whether they can go back to their past glory. Let's get your opening thoughts.
Thank you for having me here. Yes, absolutely. We've seen multiple market cycles in the past also. But what is important is that we keep our eyes set on the business momentum. And we are seeing fantastic business momentum out there, especially on the consumer side. The consumer adoption is only growing. And most of these companies, when we're looking at the entire ecosystem itself, growth rates are very healthy. So nothing has changed from the business standpoint, and nothing has changed, irrespective of the market cycles. The business cycles are very strong.
Varun, just looking at, some of your top holdings, and they'll come up for our viewers. You've got Zensar, Zomato, PB Fintech, Info Edge, Affle, Tech Mahindra, Birlasoft, RateGain, MapMyIndia, Emphasis. A lot of your traditional IT services companies also find their way into the digital fund. A lot of people ask us, right, which of the IT companies are at the forefront of this entire AI wave, where, the DeepSeeks and the Alibabas and the NVIDIAs of the world are doing so well. In India, in the tech space, because you track a lot of these IT companies and they make their way to your fund, which companies would you say can really ride the digital boom and the wave that we're seeing?
See, the Indian technology ecosystem is a bit different from when we look at globally countries, especially US and even, China. So we have IT services companies which have become, or the entire ecosystem which has become big here. But we are also seeing that digital companies or core technology companies emanating from several other areas. Now, within IT services also, there are companies which are growing fast, which have differentiated strategies. There are also opportunities when it comes to turnaround stories where companies may not have done well in the past, but because of the change in management or strategy, these companies can do better in future. So they do find a place in these digital and technology funds. All across, we cannot compare it on a like-to-like basis, but yes, there are certain companies which are catching on and latching to these global trends, and they can benefit out of those. As long as those companies can demonstrate high growth for a longer time frame, they will definitely find their way in our digital fund.
So, Varun, the question is, let's go segment by segment, because I know you can't get into individual stocks, but let's try and understand the growth potential and then the valuation reality around it. So, starting with food delivery and quick commerce. I mean, no one's denying the fact that there have been massive disruptors. We're all completely hooked onto our apps. But the question is, can the moat be a sustainable one? Or is it a bit of a race to the bottom with discounts, etc.? And more importantly, many of these companies, especially on the quick commerce side, they've also said that they're going to be investing more in dark stores and expansion, etc. So from a market perspective, what about valuations? What about profitability? And what about ultimately, return expectations over the medium term?
See, what we've observed globally is that when it comes to internet stocks and digital stocks, and specifically those companies, typically the biggest moat is the scale itself, because the entry barriers usually are not very high. So most of the companies globally have also focused initially only on garnering a very high scale. And it is not uncommon to find, these sub-segments to be winner-take-all markets. And we've observed these characteristics even in India, in several other areas of digital, where digital has become mainstream. So typically, this is the behavior that these companies always go after growth and very high scale first. And then usually the profitability comes in because the market also matures to some extent by that time. And the consumer behavior also changes towards the adoption and towards the convenience that these companies bring to them as compared to what is available in the offline ecosystem. At the end of the day, most of these companies are empowering their customers. They are basically shifting the power away from suppliers to consumers, and this is the primary reason why this leads to such high consumer adoption and such accelerated consumer adoption. Now, keeping that in mind, when we look at these companies or try to value these companies with traditional valuation methods, they have typically not worked even globally in the past. And that is one mistake that we at Motilal Oswal do not want to make. Having seen the evidence outside, the traditional valuation methods do not work. And that is something that we've discussed and written on extensively, that these companies need to be looked at in a different fashion, through a different lens, and need to be valued differently than what we usually do in case of other traditional companies.
That's a point well taken, absolutely. And I think we've all realized that when they came to the market talking about price to sales, then the earnings had to come in and all of that. We've gone through that whole cycle. My question is more on whatever lens you're putting on now to look at valuations, what would be the right, whether it's a PEG multiple or whatever multiple you're looking at, what is it that you are comfortable with? What is the multiple expansion trajectory? And aren't the multiples of these companies here in India still way higher than, say, some of their counterparts in China? So isn't that a risk with respect to attracting more foreign capital whenever those FPIs return to our market?
See, we have to also do a like-to-like comparison in terms of the life cycle of these companies, where our Indian companies are versus where the China or the US companies are. We are fairly nascent, we are fairly small as compared to the companies elsewhere, where companies have become big. And when we do these comparisons on a life cycle basis, that we are in that nascent stage and how those companies and how those businesses used to operate when they were nascent, then we are actually, at similar stages. If we go back 10 years, 15 years, and then compare in our digital companies with the US or Chinese companies. So from that perspective, there is no difference. Coming to valuations, when we look at valuations and we just broadly dissect them into business compounding and, or let's say when we're looking at stock price return and dissect them into business compounding and valuations, what we usually observe is that business compounding is happening at a very, very healthy rate. And valuations, even if they don't improve, then we should expect that, in the longer term, stock returns are a function of business compounding rather than valuations. If valuations improve, good. But if they don't, then business compounding is something that is very important from a longer term, stock returns perspective. And that is where we are seeing that from a business standpoint, the business is only becoming bigger, the business is becoming stronger. And once they reach a threshold, once they reach critical mass, then profitability and cash flows are also a given.
So just to, wrap this up and give some advice to our viewers, fresh money allocation, would it be to your e-commerce, quick commerce type companies? Would it be to IT services companies? Would it be to fintech companies like PB Fintech? Where would incremental money be allocated to at these levels?
See, when we look at IT services as an industry overall, we don't find it too lucrative because of low growth prospects from a longer term perspective. We find digital ecosystem to be extremely, extremely attractive and lucrative from multiple decades perspective, because this is a very high growth ecosystem. And as I said, from a longer term standpoint, it's the business compounding and business scale up, which will help generate returns and create value. Rather than finding value in low growth stocks, and that is something that we would never advise. We would always advise towards capturing business compounding and making use of these stock price movements in the short term to strengthen portfolios and actually improve the overall portfolio positioning in the digital ecosystem.
Okay. All right, Varun, this has been an interesting conversation. Thank you very much. And we hope to have more of them as the months progress. Let's see. You definitely are quite optimistic on the prospects ahead. We will take a very quick break on that note. On the other side, we'll come back with lots more. But as we take that break, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. You can get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. You just need to download the CNBC-TV18 app now from the Apple Store or from Google Play. You can, of course, also scan the QR code that's on your screen.